Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, entrepreneurs, executives, thought leaders, artists, you name it, all around the world of crypto and blockchain. And today I have an amazing guest. How do I know? Because the man bought me lunch 2 months ago. And it was a great conversation, and I'm happy to have him here. His name is Carlos Balbin. Carlos, welcome.
Hi, Jamil. Thank you very much for having me today in your space. Highly appreciated. Yeah, welcome. Thank you.
Yeah, it's gonna be great. So let's kick things off, and
Okay.
it's great to see you. And I'll ask you first. What is your background, and is it a logical background for what you're doing now, and what are you doing now?
Well, professionally, I have 24 years of experience in banking and financial services, as well as in capital markets. I have done anything that you can imagine. I started my career in commercial banking, then I progressed in investment banking. I did research for commodities. I moved to the States. I work in hedge fund accounting and operation, what it is normally known as fund admin. Then I went to business school in Carnegie Mellon. In Carnegie Mellon, I did a paper on Bitcoin. And you cannot imagine how much rejection I faced there back in 2015. Not too many people believe on the technology of blockchain. So I had to build consensus there with the PhD professor that worked in the Federal Reserve in order to have that paper passed. And at the end, I get a grade of A. So after graduation from Carnegie Mellon, I started working as a consultant for banks in retail and also in capital markets. I did several digital transformations. The last one happened in Spain. And then I made my transition in risk management in payments in American Express. After that, after COVID, I started doing my own side consulting, and I just finished a program in a company called GoingVC, which is also a syndicate of venture capitalists, but at the same time, they have an educational program. So I get this degree in venture capital. And one of the conditions for graduation was preparing this thesis, right? And then I focused on real-world asset tokenization. So to answer your second question, if my background makes sense, absolutely, because I have worked in capital markets. I know the ins and outs of several verticals within financial services, anything from credit card to commercial loans to debt to origination of debts, equity, debt, investment banking, all that. And then I can see, I could see when I was in the MBA how disruptive in 2015 would be blockchain. And now I can see that the adoption of real-world asset token is happening now, right? And we are just starting. So yes, to answer your question, yes, my background has a lot of sense. Yeah.
What was the paper on in 2015 on Bitcoin? What specifically
It was the strategic implications of Bitcoin. It's in my profile in LinkedIn. So anybody that wants to follow me in LinkedIn, you can find me as Carlos G. Balbin, and then you can see all my papers or publications that I do there. Yeah.
Excellent. So let's talk about that venture capital thesis, right?
Mm-hmm.
You have developed that thesis that what you think is going to happen in the upcoming bull market 2024, 2025, how you think that'll play out. Please walk us through the highlights of your thesis.
Sure, absolutely. So the thesis is a very exhaustive paper, right? It comprises 70 pages, right? It's basically a venture capital investment thesis, which is basically focused on early stage companies, right? By early stage, I refer pre-seed or seed before any series, right? Before A, B, C, right? So I think in that sense, anybody that is involved into venture capital in crypto, blockchain, or Web3 will find a lot of value in this thesis, because if you are not early stage, guess what? You are Series A, you are Series B, and then you will look for these companies, how they evolve in value, right? And just to give you a sense of how valuable it is, if you go to page 58 of my thesis, I mentioned there two companies that in the last 2-3 weeks have been funded. One of them is Eigenlayer that received $100 million for Andreessen Horowitz, and the other just happened last week that is called EtherFi that received about $20+ million in funding in Series A. So there is a lot of value there. Take a look, and if you have questions, I mean, you can follow up. Yeah, but basically, yeah, the highlights is if you go to the first page page of executive summary, right? I would say that one of the most important findings there is like basically the blockchain adoption is right now in the point in which it's surpassing the compounded annual growth rate that we experience when we start adopting the internet, right? So that is happening right now. Also, another important finding is that the market penetration of most of the technologies in blockchain, one of them is tokenization, right? We have several capabilities, right? We have stable coins, we have zero knowledge proof. All of them are in a point in which they are 2 to 5 years before industrial adoption, right? So it means that we have the next 5 years. In the next 2 to 5 years, we're going to have a lot of breakthroughs, a lot of development. And if we talk about only tokenization, it has a market penetration of 5 to 20%. There is an increasing institutional interest in the technology. And just to give you this statistic, right? The tokenized treasuries year on year have multiplied by 7 times. That's humongous. So basically, the number of treasuries that have been tokenized in 2002, in 2003 represents 7 times the number that was tokenized in 2022, right? So that is a huge increase. As well, the amount of debt, tokenized debt, private debt, increasing 47% year on year. So that is a huge development. Other things that I could find is, for example, there is increased partnership between what we know as CFI and DeFi. But centralized finance, I mean banks and regulated institutions, but also important ecosystems in CFI, right? So what we have to understand is that basically after the debacle that happened with FTX and some bank fraud, I mean, the industry touched a bottom, right? There was a sort of capitulation, and then all the ecosystems and protocols that survive that event are the ones that are going to be building this new more resilient ecosystem, right? So there is a lot of collaboration between, for example, in Project Guardian, between JP Morgan, Apollo, and Avalanche, and other DeFi protocols, right? There is interesting wins in the regulatory space. For example, we have the final trial between Ripple and SEC, right? That basically it was kind of ambiguous, but at the same time, it provides some regulatory clarity. At the same time, the launching of these 11 Bitcoin ETFs is a huge development because basically it means that asset managers are betting for the space, and they are gonna bring wealth managers, right? And then this is gonna increase the adoption of not only crypto products, but also it's gonna increase indirectly real world asset tokenization. So also we have witnessed an increased technological integration, right? For example, 1 year ago, the main protocol that was tokenizing securities was Stellar. But today, Ethereum has surpassed and has captured 59% of market share. So what does that tell you? That tells you that Ethereum ecosystem has reached maturity. And now institutional players are trusting more Ethereum, right? That's huge development, right? That together with the 7 times multiple of tokenized treasuries is huge developments in this space. What else? We have a strong focus on interoperability in terms of bringing information on chain from oracles, and also solving problems for data market makers. Also, we know that the venture capital investment peaked in the years of 2021, 2022. But that doesn't mean that there won't be important investment to make in this year and forward, right? The clear example is my page 58, right? Two to 3 weeks ago, I mean, Eigenlayer received 100 million and Ether5 received 20 million last week. So basically, there is still chance to invest good money for good returns in venture capital for a special protocols or ecosystems that are focused on solving real problems, right? In terms of interoperability, security, so on and so forth. What other bold moves we have seen in the space? Well, we have more funds that are launching, that are betting on real world assets. We have also Coinbase, for example, that has adopted an interesting strategy of if tokenization of real world assets implies to tokenize a bond that exists in the real world, why to begin with I had to originate a bond in the real world? Why don't we start by doing it digitally, right? And that's basically the strategy of Coinbase, right? So these are in a nutshell basically the main highlights of the report, no? And I can tell you a little bit more of how it's structured, but perhaps I can leave it that for other questions that you may have, Jamil.
I have lots of other questions. The first one, I want to do a follow-up question. You know, back in 2017 and 18, I moved from AIG corporate background, which is similar to your banking background, and I went into the ICO space, which is seed investing in crypto, right? And now you have gone through this VC program, and you are now, looking at seed investments. How's the transition been from this traditional, corporate world to a VC seed world? What have you learned along the way so far?
So well, I mean, the corporate strategy to invest into, let's say, into crypto space is totally different from a venture capital strategy, right? Like when you have your own fund, right? Or when you work for a fund, right? Normally, the corporate strategy, they want not necessarily to find the next unicorn, right? So, but they are looking for a technology that's either a threat to their current market positioning and they have to acquire it so they can stop it, or basically a technology that they need to keep growing and improving their product offering, right? What the startup gains in being in receiving funding for a corporate basically is market access, clients. They don't need to worry about it, right? Conversely, when you work for a venture capital firm or for a fund, you are really looking for the next unicorn, right? For the protocol, for the company that is really gonna add a ton of value to the whole ecosystem or a particular segment of the ecosystem in terms of interoperability, security, something amazing new that was missing and is bringing a lot of value, right? So and you are basically more agnostic, right? Like and it's up to the protocol to find their own clients, to generate their own go-to-market strategy. Of course, the venture capital firm is going to help with introductions, but it is upon the founders to execute well and create a great go-to-market strategy, basically, right? So those are the two main differences.
Got it. Thank you. So far there have been you mentioned FTX, but there have been major roadblocks, to mass crypto adoption globally. Some of those old roadblocks are no longer here, but there are new roadblocks, right? Or persisting roadblocks. So what continue to be some of those major roadblocks of mass crypto adoption?
Well, I mean, this is a very interesting question because when I started the program, I did a statistics of what we call like a postmortem, right? And amazingly, more than 50% of the crypto protocols or startups that fail because of regulatory concerns, right? So I would say that still it is regulatory uncertainty and restrictions, right? And And here is very interesting because we have geographies and jurisdictions in which they are very friendly, right, to the ecosystem and to the technology, blockchain technology, right? We're talking about Singapore, we're talking about Abu Dhabi, right? And let's say USA, I mean, has a different stance, right? They still, the politicians and the regulators still see the technology as a threat, right? And it's kind of, it kind of has to be because we have the dollar, right? The dollar is the American superpower, right? We have the international reserve currency, right? But I think that in the future, I mean, that instance has to change from regulators, right? They have to think that it's in the best strategic interest of USA to keep dollarizing the ecosystems and the world, right? We have euro dollars, we have petrodollars, right? So we have to keep dollarizing crypto, right? That is in our best strategic interest, right? So that has to change, right? But in the meantime, even if we had the win of Ripple versus SEC and this fantastic launching of 11 ETF Bitcoin instruments, those are regulatory wins. There is still a lot of to work on and regulatory clarity and uncertainty, right? That basically helps once for all, like to develop this in USA in a better pace that we have been doing, right? Other roadblocks are, of course, volatility, right? And this is something that for the non-believers, right, in the technology, they always come up, right? Like, keep crypto or Ethereum or Bitcoin, I cannot use it as a mean of payment, right? However, there are interesting papers that say that in time, for example, with Bitcoin, right, the volatility is going to reduce because you're going to reach a point in which you won't have to issue more units, right? I think that we are capped to 21 million, right? So in time, the volatility is going to be less and less. And because of that, it's gonna the potential participation or asset allocation that, let's say, asset managers can put into Bitcoin is going to increase, right? Right now, there are studies that says that between 1 to 3% is enough, right, of allocating Bitcoin. But in the future, that percentage allocation will increase just because the volatility will be reduced. And it makes sense too, right? Because when we launched a gold ETF, at the beginning it was going down, right? But also, well, gold has been, let's say, financialized for quite some time before even the launching of ETF, right? We have options of gold, we have futures of gold. So we are going to have basically the financialization of Bitcoin, right? And that basically is going to help to reduce somehow the volatility, right? And then this is gonna counter-argue this other roadblock, right? That has always been there, right? The other issue, of course, is scalability, right? And this comes from technological challenges, that interoperability situations that are being fixed and addressed one by one, right? There is, of course, the security concerns, like the famous scams that happen, the lack of education. So all those are still there, right? And again, here the government keeps preaching and preaching that, hey, Bitcoin, crypto, and even some important market participants like a Jimmy Dime, right? Hey, it's a scam, but no, I mean, basically when I did this paper in 2015, the same amount of narcoterrorism, drug dealership happens in euros, in dollars, and it's happening in crypto. So it's not that Bitcoin is funding terrorists in 10%. No, the amount is no more than 5, probably, not even 1 to 3%. So, and the same proportion happens in euros and dollars. So this is not an argument but this is what the press sells, right? The press says it's unsafe, it's a scam, be careful, and then that has to stop too, right? And that will go in line also with the regulatory certainty, right? Once the authorities realize that they had to provide very good laws, right? Not laws trying to control or try to force the nature of the technology, because the nature of the technology is decentralized, right? So you have to take in consideration that we have to reach that level of maturity, basically, no? Another items, for example, is market fragmentation, but that is also being addressed with new technologies that are or protocols that are basically doing many things multi-chain or cross-chain, right? So yeah, I would say that these are and have been the main roadblocks.
Great, thank you. So you mentioned regulatory, you mentioned the Bitcoin ETFs. You know, earlier you mentioned Ethereum and this argument out there in Ethereum versus, you know, the other chain communities, if ETH is money, you know, and I view it that way, but, you know, there are other bold moves that market participants are taking, you know, in addition to Bitcoin ETFs and Ethereum ETS application, right? What are those bold moves they're taking that they must take to set themselves up for success going forward?
Well, I mean, in talking about real world asset tokenization, right? I can see, for example, and I explained this in the pages 11 to 19 in my thesis, right? So we see increasing partnerships between CeFi institutions and DeFi institutions, right? Just for definition, CeFi means centralized finance. There we are talking about asset managers like BlackRock, Apollo, or banks like a Bank of America or JP Morgan or Fidelity, wherever, right? And traditional DeFi, right? DeFi, we are talking about, I don't know, Centrifuge, we are talking about Ethereum, right? So in the past, they didn't collaborate, right? But now they start collaborating, right? And the case in point there is basically the most important development is the project Guardian from JP Morgan, right? And even if Jimmy Dimon is coming out of press saying like, no, he doesn't believe in crypto, his business units are doing it. And they are drawing very, very interesting conclusions and experiences that are helpful for both, for banks, asset managers, and also decentralized finance protocols, right? And this is basically creating I would say a school or a critical mass. So they are going to share those learnings, and this collaboration gonna keep happening more and more, right? So in the future, what I see is like a Bank of America is going to do the same, Citi is going to do the same. So the collaboration start happening, and it will keep speeding up. The other thing that I have seen is, of course, the regulatory evolution. We talk about that. We talk about the win between Ripple and SEC and the launching of the 11 Bitcoin ETF. But I would say also the technology integration that is happening, right? And especially because this, when you start collaborating, when the collaboration start happening between DeFi and CeFi, that also means that not only is that the banks are concerned about the regulations that they are subject to and security and all that stuff, but also they want to learn from what DeFi is doing and how they can perfect the models, right? So at the end, and this is the important thing that I learned from permissionless last year, right? Like it is not like the banks or institutions are here to trade shit coins and ETF, right? They are gonna trade their real world assets, but they want to bring them on chain, right? But for that, they need the help of DeFi, so they can learn together, and I think it's a win-win for both, right? And then probably the ones that have started early, such as JP Morgan, are the ones that are going to be capable of having their own chains, right? But I don't believe that all the banks will be able to, because number one, they didn't start it early, such as JP Morgan, but also because of technology integration, the decentralized finance protocol are going to become more and more safe, right? And then it's going to be a cost-based decision, right? The banks are going to think like, I'm going to launch my own chain, or better collaborate in a hybrid model, for example, right? So this is what I mean with technology integration. This is where we are going. Then other thing that I have seen is the interoperability, right? There are several protocols, right? There is CCIP, there is Layer 0, there is IBC, Nomad, Axelar. Axelar collaborates in Project Guardian with JP Morgan. And all of these protocols, what they're trying to do is basically merge the public chain value with the bank chain value, right? So basically it's information, right? Once that happens, also, it's going to be interesting, right? other development that I see is the particular strategy from Coinbase, right? Because Coinbase has a different instance. They are collaborating with the Financial Services Regulatory Agency in Abu Dhabi. And they think, why do I have to tokenize a real world asset when I can originate digitally a bond or a stock or a private equity thing digitally to begin with? Well, let's save this step of tokenizing something that exists in the real world. Let's start originating this in a digital world and take it from there, right? So I think this is very avant-garde from Coinbase. And yeah, so these are basically the main developments that I see, the bold moves that are happening, you know, so in the real world asset tokenization space.
I want to go back to something you said that was interesting. You said Jamie Dimon has come out a lot and said that he's against crypto.
Yes.
I disagree. He said he's against Bitcoin. He's never said he's against Ethereum.
That's a good point. Yes, you're correct. Yes. So and that kind of guys goes in line, right, with the JP Morgan strategy, right? They are trying to trade real world assets using the technology on chain, right? Yeah, that makes sense. Yes, thank you for that correction. I mean, you're right.
No, it just dawned on me. He's like, he's not against crypto. It was like they have a space in the Decentraland. They're using Ethereum, like, and they used it for many years. And I'm like, he's just fighting for the dollar. But in order to fight for the dollar, that means that you have to suppress something, right? And right now, according to your report, only 0.01% of the world population has access to real world asset tokens. How do we drastically improve that number? And what's the path of adoption for the 99.9% of the world going forward?
Yeah, so basically that 0.01%, which looks super slim, doesn't take in count stable coins, right? If we take in count stable coins, that number raised to 11%, right? So basically stable coins are the first use case of real world asset tokenization, right? Basically, I'm taking a dollar and I'm representing a real world dollar into a digital form on chain, right? So when I mean 0.1%, I mean like the treasuries, tokenized treasuries. I mean private debt, private equity, real estate, all those. So basically, the people are still not there, right? But I think in the future, in not so distant future, we are gonna get there, right? So people will have the opportunity to invest into opportunities of fractionalized real estate, for example, right? And that exists already off-chain, exists there are several platforms, right? And the competition is fierce, right? But once that happens in crypto, it's gonna be massive because the capabilities that crypto has for provenance, for traceability, for automatic execution, I mean, does not compare with something off chain, right? And this is what basically these consultants have seen, right? That the major opportunity on real world asset tokenization exists in the alternative space, in particularly for high net worth individuals, right? So yeah, so basically, how do we drastically improve that number? Okay, let me think about that. So let me think a little bit about that. So yeah, I mean, of course, again, coming back to the regulatory clarity and compliance, right? It's very important to set clear rules, right? Of what can be done and what cannot be done, right? And how it's supposed to be done, right? And this is something that I got also from Permissionless last year, right? Like the industry were saying like the SEC, when they see a model that is kind of disruptive and they don't like, they pick and choose and they call them to trial or they forbid their operations, right? So that should not exist. Like the law has to be for everybody, right? There is not having a law with name, right? So it has to be a nice playing field for everybody. Everybody knows what to do and know what to do, right? Also, how more else we can improve is with improving the market infrastructure. And I think that is happening, right? Like one of the three main drivers of real world asset tokenization right now are, number one, stable coins. So the more stable coins that we have, the better. Also, bringing other assets different from treasuries, right? Treasuries have been, let's say, following the level of risk, right, of stable coins. Treasuries is the next one, right? What else can you bring? You can bring private debt, right? What else can you bring? Public debt, public equities, and then, of course, private equity too, right? So those are start happenings, but still we are not there into mass adoption, right? Another driver that we can think about to improve adoption is the educational part, right? Because it's because of education or lack of education that retail investors are being scammed, right? At the same time, in the high net worth as alternative space, most of the wealthy individuals, they have interest into diversifying their wealth into alternatives, but only 40 to 50% lack of the knowledge, right? That's very interesting finding from this consulting Bain report that I incorporated in this research, right? So education is also an important driver, and supported education, right? Because if we are going to still have the regulators saying that this is a scam, that is funding narcoterrorism, this is not going to help, right? We have to get an alignment there, and we have to start thinking that this is in the best of interest of USA to tokenize the world, right? To take over also the tokenization of real assets, right? So what else? Also, any effort to improve liquidity or keep liquidity, and this is happening right now, right, with this Eigenlayer, with Ether5. So now we have this new technology, right? The third driver that supports real world asset tokenization is liquidity state tokens, right? So we have stable coins too. We have other kind of papers different from treasuries, like a private debt, and we have liquidity state tokens, right? And again, Layers, what it does is basically restaking, right? So traditionally, with staking, you take a token, you lock it, and in order to perfect the system, improve the security, and you are rewarded for that. But that happens only in one ecosystem, right, or one protocol, right? But with again Layer, what is happening is this is happening across chains. And the staking is happening multiple times, right? So it's amazing how the technology has evolved in terms of staking. And this is basically supporting the liquidity side, right? So yeah, so those would be the ways that we can accelerate the adoption, right?
I feel you're missing one.
Oh, please tell me.
I mean, it's not wanted in the U.S. by the U.S. citizens,
Uh-huh.
but it is popular. It is a popular topic all around the rest of the world, and that's central bank digital currencies.
Oh, yeah.
How do you think? How do you think they would have a positive? I mean, Donald Trump's running for president again. He said that if he is elected, there will be no central bank digital currency. The people don't want that, but I would look around the rest of the world, and people want that. So how would that help improve that number? What does that path look like?
So you think that the people want a central bank digital currency?
Other countries, yeah.
Well, I mean, what I read about it is, okay, number one, the central bank digital currency is digital only, right? And it's gonna have a lot of control over your life, right? I'm not sure if people would like that, you know? And number two, because it's the sovereign currency or the dollar 2.0, right? They can impose and tell you, listen, starting from this day to this day, you're going to start using CDBC dollar. Otherwise, you are not going to get service from banks or whatever. So people is going to be forced to do that, right? But what I think happening in developing countries right? Like I think there is a case in Africa, right, that they are forbidding crypto, right? And basically they are forcing people to use, I don't know, I think they already have a CDBC there or the national currency, and people don't want to do it because they don't want to face the valuation, right? Because that's the other counterpart, right? Governments can force you to use a currency, but governments cannot help to create inflation and devaluation, right? And then because of that, exists tremendous black market in crypto in this African country, right? So I know that this is just only one or two dots, and it's hard to draw a trend from that, but I think that the human behavior is going to be, listen, just like it's happening right now in Latin America, right? People, Argentina, right? Or Turkey or Egypt, right? These three cases happen of huge devaluation in across the world last year, right? They are looking for dollars as a refuge, right? But if the dollar is gonna be weaponized and it's gonna be used to control, I think that not too many people or not all the people will like it, and then they will try to seek for an alternative, you know. And the alternative still is gonna be decentralized finance, you know, some sort of wallet in the decentralized finance world, right? Or some other providers in that are giving you these services from alternative jurisdictions, right? Like Abu Dhabi, Singapore, right? Because this is where the current situation stands, right? Like USA still don't get it's up together, right? Like should I control or should I embrace it? And if I embrace it, it's good for me because I keep dollarizing the crypto world, you know?
So what I hear you say is that if central bank digital currencies get rolled out, that's going to inspire people to use crypto even more.
Yes, in that sense, yes. But when they realize that it's all about control and things, they're gonna move to CeFi. So to decentralized finance, sorry, to DeFi.
Yep, that's got it. Yep, makes sense.
Mm-hmm.
So, you know, I want to have another couple questions for you. You talked about certain sectors that are ripe for RW for real world asset tokenization disruption. You know, what is this at a high level? What are some of the subsectors that really should be looking at that are going to be ripe for disruption?
Yeah. So why the alternative industry, right? So in page number 24, I did an interesting, how do you say, market sizing, right? I did it in three ways, right? One was my way. So I get into the internet and research all the alternative space, right? The alternative space is comprised by real estate. It can be intellectual property, commodities, debt, infrastructure, art, collectibles, luxury, all those things that are different from equity and debt, public equity and public debt, right? And I came out with a great number of $772 trillion, right? Then I look at the report of Citibank, and they came out with a number, probably from the standpoint of a bank that the longer hanging fruit, what they can tokenize really quick, right? They come back with a $268 trillion of total addressable market, right? And then finally, I found this report from Bain, which is very interesting, and they do this in together with JP Morgan to support the Guardian project, right? Project Guardian, right? So, and they came out with a number of 150 trillion total addressable market. So that is why the industry players talk about a trillion market opportunity there, right? Now, why alternative investment is so important, right? Because it has several problems, right? Besides the regulatory uncertainty, it has technological challenges, problems with adoption and liquidity, right? It's a space, and I work there in hedge fund accounting and operation, right? From the standpoint of fund admin, right? It's a clunky supply chain, right? Addressing the investor needs are the wealth managers, the asset managers, the fund admin, and the technology platform providers, right? It's super clunky. So when you want to have for example, capital redemptions, there are for example, capital locks for many years. In venture capital only, for example, right? A venture capital investor knows that when he invests money, he's going to lock it for 10 years at least, right? But can you imagine this future world, right? Like in which There is a secondary for private equity, for venture capital. There is a secondary market in which you can redeem or you can collateralize your participation in a particular venture capital fund. You can use it as a collateral. So that is the opportunity, right? And basically the technology solves these problems for data management. There are a lot of manual processes, manual reporting, right? So the technology solves these problems of data management, these problems of liquidity, these problems of collateralization, and they are going to be innovative cases, right? So they're going to be programmatic rebalancing, investments, automatic capital calls, things like that, right? So it's basically a $100 trillion opportunity in the alternative space for high net worth individuals. That translates in basically $400 billion of annual revenue for these market participants, right? So in the page number 30 of my report, I did a qualitative assessment of these spaces, right? And I basically scratched down infrastructure and energy and insurance products, right? And then I would say that the most important segments in the alternative space that has total addressable market in the order of trillions still is real estate, commodities, intellectual property, any other financial asset or debt asset that is not public. And yeah, and that's it. Those are the more important ones, but there are also other interesting ones that have addressable market in the order of like sport goods, luxury goods, things like that, right? So, and my report talks about each of them in more detail from page 31 all the way to page 38. And then from page 39, it presents a list of opportunities of investment from early stage all the way to ABC, whatever. And it happens that in page 58 was the one that spoke about Eigenlayer and EtherFi, and they just happen to be investment in the last 2-3 weeks, right? So yeah, I hope that answered your question.
It does. I want to thank you for that. I have one more question. I want to find out more about your mandate. You explained it to me, but we're both on Twitter X, right?
Mm-hmm.
And when I post, I post tickers of cryptocurrencies that already listed in the top 50 or whatever, and I look at you saying your the ticker system symbols that you put out there, and then I go to CoinGecko and I can't find any. So I'm wondering what actually are they? And what is that your mandate, and what is your mandate, and what are those tickers?
Oh yeah. No, so this ticker thing. So I love the world of investment, right? To begin with, right? So I consider myself an investor. So I handle my own portfolio, right? And it took me a while to discover that I am in the upper end of the investment spectrum, right? Like I like high risk, and that is why I'm in venture capital, right? That is all about what is venture capital is, right? Like out of 100 investment, only 1% will be unicorns, right? And I like this research and things like that. But that doesn't mean that I don't invest in equity, right? So what I do in my Twitter channel, this came before I started doing venture capital. Like I wanted to share my investments, right? That I do in my personal portfolio, right? And that's basically the tickers I published there, right? Like I have been lucky to invest in, of course, in NVIDIA. I have sold half of the position already. Super microcomputers, I have like a 5 times return. So I'm not that bad, but I'm not working in an asset management firm, right? So, and I think that, I mean, this is not investment advice either, right? And I put that as a disclosure in my Twitter profile, right? Now, if you ask me for the mandate, if I would be launching, because this was also the purpose of me taking the venture capital program, right? Like I enroll into the investor program too, right? And the purpose of the investor program is to launch in the future, not so distant, your own fund, right? So if I would launch my venture capital fund, I will be focused on artificial intelligence and crypto. I will look to fundraise $50 million. It will be me and I and another partner that we have complementary skill sets. Like I'm good at research and networking. Probably I will look for someone that has a technical background. And then, I mean, I will look to do investments of first checks. I will focus on early stage, meaning pre-seed, seed, anything before Series A. I will write 30 checks and do 16 follow-ups, right? And yeah, I will focus on crypto and artificial intelligence, but in crypto, I will focus on stable coins, on interoperability, on smart contracts, and any other pick and shovel solutions such as Eigenlayer that increase liquidity staking, for example, or PETH that increase data transparency, right? So those solutions still exist, right? So that would be my focus. So hope that answers your question.
Oh, it did. Thank you very much. So I want to thank you very much for your time today. This has been a wonderful, enjoyable conversation for me. I have one final question. It's an easy one. How can people find out more information about you, about your work, about what you do? How can they locate your research report? How can they do any of that and find out more information about you?
Absolutely. So I'm basically socially active in Twitter and LinkedIn, right? So in LinkedIn, you can find me as Carlos G. Balbin, all together, right? Or in Twitter, you can find me under the handle at CGBA001, at CGBA001, or Carlos G. Balvin in Twitter, and sorry, in LinkedIn. There I publish, I normally, like once or two times a month, I publish some articles. So my current research, I publish it at the end of January. I consider it has been successful because already two companies have been funded in Series A. It's already pinned there in my profile. But also I publish articles about microeconomics, about general investments. I also publish forecasting of where Bitcoin is going. I also do customized forecasting for any particular token. So if you are interested, you can contact me. We can talk about it. I'm capable of generating forecasting for tokens. There is an example there that is also pinned that is, I can disclose it now because I did this consulting a long time ago. It's a StormX. StormX is basically a rewards token, right? So I was able to create a model that forecasts the price with an accuracy of 98%. And I even made money there. So you can see that how it's published into my profile. Also, what I'm planning to do in the future is to do a thesis on artificial intelligence and also the convergence of artificial intelligence and Web3 or crypto that we call the ping, right? So also, because I'm a scout on venture capital, I'm gonna be publishing the companies that I have found, right? For example, right now I have two that are fantastic. One is called Moksha, that basically solves for inventory shrink at retailers. It's an artificial intelligence solution that can give back 1% gross margin to retailers, right? Or I have another company that is called Parsimony that does supply chain artificial intelligence, right? So I'm gonna be doing that. I'm gonna be doing like a special reports for companies that I find promising, and hopefully one firm hire my services, as a venture capitalist. But I'm here for fun, and I'm getting the experience. And in the future, of course, I will look for fundraising my own fund.
Awesome. Thank you very much for your time today.
Thank you, Yamil, for having me and giving me this chance to access your audience. Very kind from you.